Taxes are something we all have to deal with, but did you know there are legal ways to reduce your tax burden significantly? In today's video, we'll be breaking down the book, Top 10 Ways to Avoid Taxes by Mark J. Quann. This book is packed with strategies that can help you keep more of your hard-earned money by taking advantage of the tax code in ways that are perfectly legal. We'll go through each chapter in detail and show you how you can apply these strategies in your own financial life. And remember, if you want to dive deeper, there's a link to the full book in the description below. Let's get started. This is Wealthlocity. Here you create, protect, and grow your wealth fast. Chapter 1 lays the foundation by helping you understand the tax code. Mark J. Quann explains that the tax code is complex, but it's designed with numerous deductions, credits, and loopholes that taxpayers can legally take advantage of. He emphasizes that knowledge is power when it comes to taxes, and understanding how the tax system works is the first step toward reducing your tax liability. To start applying this in your daily life, take the time to learn about the basic structure of the tax code, especially the sections that apply to your personal or business situation. You don't need to become a tax expert, but having a general understanding will help you identify opportunities to save on taxes. Consider working with a tax professional who can guide you through the specifics and help you develop a tax strategy that maximizes your savings. In Chapter 2, Quann discusses the power of tax-advantaged accounts. These include 401(k)s, IRAs, health savings accounts, HSAs, and 529 college savings plans. Contributions to these accounts are often tax-deductible, and the earnings grow tax-free or tax-deferred, which can significantly reduce your taxable income. If you're not already contributing to tax-advantaged accounts, now is the time to start. Maximize contributions to your 401(k) or IRA to lower your taxable income. If you have a high-deductible health plan, consider contributing to an HSA, where the funds can be used tax-free for qualified medical expenses. For parents, a 529 plan is an excellent way to save for your child's education while taking advantage of potential state tax benefits. Each of these accounts offers unique tax advantages that can help you save money now and in the future. Chapter 3 focuses on deductions and credits, which are two of the most powerful tools in reducing your tax bill. Deductions lower your taxable income, while credits directly reduce the amount of tax you owe. Quann breaks down common deductions, such as mortgage interest, charitable contributions, and student loan interest, as well as valuable credits like the Earned Income Tax Credit, EITC, and the Child Tax Credit. To make the most of deductions and credits, keep detailed records of your expenses throughout the year. Use tax preparation software or consult with a tax professional to ensure you're claiming all the deductions and credits you're eligible for. This proactive approach can result in significant savings on your tax return. For example, if you're a homeowner, make sure you're deducting mortgage interest and property taxes. If you're a parent, ensure you're claiming the child tax credit and any dependent care credits you're entitled to. In Chapter 4, Quann explores the concept of depreciation, which is a non-cash deduction that allows you to recover the cost of certain assets over time. This is particularly relevant for business owners and real estate investors, who can depreciate assets like equipment, vehicles, and buildings. If you own a business or investment property, take full advantage of depreciation to lower your taxable income. Work with a tax professional to create a depreciation schedule for your assets, ensuring that you're maximizing this deduction each year. For real estate investors, consider strategies like cost segregation, which can accelerate depreciation on certain property components and increase your tax savings in the short term. Chapter 5 dives into tax-free income sources. Quann highlights several types of income that are not subject to federal income tax, including municipal bond interest, gifts and inheritances up to certain limits, and Roth IRA withdrawals in retirement. To incorporate tax-free income into your financial plan, consider investing in municipal bonds, which offer tax-free interest income. Additionally, think about contributing to a Roth IRA, where your withdrawals in retirement will be tax-free. Understanding and utilizing these tax-free income sources can significantly enhance your overall financial strategy. In Chapter 6, Quann explains the various tax benefits associated with real estate investing. He discusses the advantages of rental property income, like being able to deduct expenses such as mortgage interest, property taxes, and repairs. He also touches on the 1031 exchange, which allows you to defer capital gains taxes when you sell a property and reinvest the proceeds in a similar property. If you're a real estate investor or considering getting into real estate, familiarize yourself with these tax strategies. Deductible expenses can offset your rental income, reducing your overall tax burden. Additionally, a 1031 exchange can be a powerful tool for deferring taxes and growing your real estate portfolio. Always consult with a tax advisor who specializes in real estate to ensure you're maximizing your tax benefits. All right, let's dive into smart gifting and charitable contributions as a way to reduce your tax liability. Quann explains that by gifting assets, such as appreciated stocks, you can avoid capital gains taxes while also potentially reducing estate taxes. Charitable donations, whether in cash or assets, can also provide substantial tax deductions. To implement these strategies, consider gifting appreciated assets to family members in lower tax brackets or to a charity to avoid paying capital gains taxes. For charitable contributions, ensure you're itemizing your deductions and keep thorough records of all donations. If you're looking for a more structured approach, consider setting up a donor-advised fund, which allows you to make a charitable donation, receive an immediate tax deduction, and then distribute the funds to charities over time. In Chapter 8, Quann discusses income shifting and splitting strategies. These involve moving income from a higher tax bracket to a lower one, often by splitting income among family members or by shifting income to a business entity. For example, paying wages to a family member in a lower tax bracket can reduce your overall tax burden. If you own a business, consider hiring family members and paying them a reasonable wage, which can lower your taxable income. Income splitting strategies, such as shifting investment income to family members in lower tax brackets, can also be effective. Always consult with a tax professional to ensure these strategies are implemented correctly and in compliance with IRS rules. Chapter 9 emphasizes the importance of retirement tax planning. Quann explains how different retirement accounts are taxed and offers strategies to minimize taxes in retirement. He discusses the benefits of Roth IRAs, tax-efficient withdrawal strategies, and the timing of Social Security benefits. To optimize your retirement tax strategy, consider contributing to both traditional and Roth retirement accounts to diversify your tax exposure. Develop a withdrawal strategy that minimizes taxes by drawing from taxable, tax-deferred, and tax-free accounts in a tax-efficient manner. Additionally, plan the timing of your Social Security benefits to reduce the tax impact on your overall retirement income. In the final chapter, Chapter 10, Quann discusses the importance of choosing the right business entity for tax purposes. Whether you're a sole proprietor, LLC, S-Corp, or C-Corp, the structure of your business can have a significant impact on your taxes. Quann provides insights into how different entities are taxed and how to choose the right one for your business needs. If you're a business owner or thinking about starting a business, consult with a tax advisor to determine the most tax-efficient structure for your situation. Each entity type offers different benefits and drawbacks, so it's important to choose one that aligns with your business goals and tax planning strategy. For example, an S-Corp might allow you to save on self-employment taxes, while a C-Corp could offer benefits if you plan to reinvest profits into the business. And that's a wrap on our detailed summary of the book by Mark J. Quann. This book provides a comprehensive guide to legally reducing your tax burden through various strategies, from utilizing tax-advantaged accounts and deductions to smart retirement planning and business entity selection. By applying these strategies, you can potentially save thousands of dollars in taxes and keep more of your hard-earned money. If you're ready to dive deeper and start implementing these strategies, be sure to check out the full book. There's a link in the description below. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and hit the notification bell so you don't miss out on more content like this. And if you have any thoughts or questions, drop them in the comments. I'd love to hear how you're applying these insights in your own financial life. Thanks for watching, and I'll see you in the next video with more money in your pocket.